Showtime.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. As we approach the end of the year, it's natural to look back on the progress that has been made toward our dual mandate objectives. Inflation has eased from its highs, and this has come without a significant increase in unemployment. That's very good news. But inflation is still too high, ongoing progress in bringing it down is not assured, and the path forward is uncertain. As we look ahead to next year, I want to assure the American people that we're fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. Our actions have moved our policy rate well into restrictive territory, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening likely have not yet been felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks that we face, the committee is proceeding carefully. We will make decisions about the extent of any additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has slowed substantially from the outsized pace seen in the third quarter. Even so, GDP is on track to expand around 2.5% for the year as a whole, bolstered by strong consumer demand as well as improving supply conditions. After picking somewhat over the summer, activity in the housing sector has flattened out and remains well below the levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our summary of economic projections, committee participants revised up their assessments of GDP growth this year, but expect growth to cool, with the median projection falling to 1.4% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 204,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth appears to be easing, and job vacancies have declined. Although the jobs-to-workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises somewhat from 3.8% at the end of this year to 4.1% at the end of next year. Inflation has eased over the past year, but remains above our longer-run goal of 2%. Based on the Consumer Price Index and other data, we estimate that total PCE prices rose 2.6% over the 12 months ending in November, and that excluding the volatile food and energy categories, core PCE prices rose 3.1%. The lower inflation readings over the past several months are welcome, but we will need to see further evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. As is evident from the SEP, we anticipate that the process of getting inflation all the way to 2% will take some time. The median projection in the SEP is 2.8% this year, falls to 2.4% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. While we believe that our policy rate is likely at or near its peak for this tightening cycle, the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. We are prepared to tighten policy further if appropriate. We're committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we're confident that inflation is on a path to that objective. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. While participants do not view it as likely to be appropriate to raise interest rates further, neither do they want to take the possibility off the table. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of 2024, 3.6% at the end of 2025, and 2.9% at the end of 2026, still above the median longer-term rate. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. In determining the extent of any additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
A lot of theatre there to try to say we can still raise rates.
Thank you, Chris Rugaber.
It's going up. There's nothing they can do.
How should we interpret the addition of the word any before additional affirming in the statement? I mean, does that mean that you're pretty much done with rate hikes and the committee has shifted away from a
He's not going to say he's done. He'll always say I might come back and surprise you.
So,
you listen.
Specifically on any, we do say that in determining the extent of any additional policy firming that may be appropriate, so any additional policy firming, that sentence. So we added the word any as an acknowledgement that we believe that we are likely at or near the peak rate for this cycle. Participants didn't write down additional hikes that we believe are likely, so that's what we wrote down. But participants also didn't want to take the possibility of further hikes off the table. So that's really what we
don't want to do that.
Mr. Chairman, the microphone, sorry. Steve Leisman, CNBC. Happy holidays, Mr. Chairman. Fed Governor Chris Waller said that if inflation continues to fall, then the Fed in the next several months could be cutting interest rates. I wonder if you could comment on whether you agree with Fed Governor Waller on that the Fed would become more restrictive if it didn't cut rates if inflation fell. Thank you, sir.
So, of course, I don't comment on any other officials, even those who work at the Fed. But I'll try to answer your question more broadly. So the way we're looking at it is really this. When we started out, right, we said the first question is how fast to move, and we moved very fast. The second question is really how high to raise the policy rate, and that's really the question that we're still on here. We're very focused on that. As I mentioned, people generally think that we're at or near that, and think it's not likely that we will hike, although they don't take that possibility off the table. So that's when you get to that question, and that's your answer. There's a naturally it begins to be the next question, which is
everybody, please welcome our new guest, Chris Timms. Copy and paste, please.
So that's really the next question.
We've got a new guest here.
That's what people are thinking about and talking about. And I would just say this. We are seeing, strong growth that appears to be moderating. We're seeing a labor market that is coming back into balance by so many measures, and we're seeing inflation making real progress. These are the things we've been wanting to see. We can't know. We still have a ways to go. No one is declaring victory. That would be premature, and we can't be guaranteed of this progress. So we're moving carefully in making that assessment of whether we need to do more or not. That's really the question that we're on. But of course, the other question, the question of when will it become appropriate to begin dialing back the amount of policy restraint in place, that begins to come into view and is clearly a topic of discussion out in the world, and also a discussion for us at our meeting today.
Can you give some color as to the nature of that discussion today? Thank you.
Sure. So it comes up in this way today. Everybody wrote down an SEP forecast, so many people mentioned what their rate forecast was, and there was no back and forth, no attempt to sort of reach agreement, like this is what I wrote down, this is what I think, that kind of thing, and a preliminary kind of a discussion like that. Not everybody did that, but many people did, and I would say there's a general expectation that this will be a topic for us looking ahead. That's really what happened in today's meeting. I can't do the head count for you in real time, but that's generally what happened today.
Go to Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. At this point, can you confidently say that the economy has avoided a recession and isn't heading for one now? And if the answer is no, I'm curious about what you'd still be looking for.
He won't agree to that, and you know it.
I think you can say that there's little basis for thinking that the economy is in a recession now. I would say that. I think there's always a probability that there will be a recession in the next year, and it's a meaningful probability no matter what the economy is doing. So it's always a real possibility. The question is it? So it's a possibility here. I have always felt,
no, it's not,
since the beginning, that there was a possibility because of the unusual situation.
You can't say there's not going to be a recession. You can't do that
in a way that enabled inflation to come down without the kind of large job losses that have often been associated with high inflation and tightening cycles. So far, that's what we're seeing. That's what many forecasters on and off the committee are seeing. This result is not guaranteed. It is far too early to declare victory. And there are certainly risks. It's certainly possible that the economy will behave in an unexpected way. It has done that repeatedly through in the post-pandemic period. Nonetheless, where we are is
Virgin Galactic is at breaking point.
That I mentioned.
2 more cents to go.
I'm curious if you're looking back
and
on
we
the past
break the
year,
3-month
you
cycle.
talked about navigating by the stars under cloudy skies. Can you talk about some of the ways in which the economy
and then short squeeze
surprised you most
in
this year, where you thought it would behave in one way and had to pivot to respond? Thanks.
So I think forecasters generally, if you go back a year, were very broadly forecasting a recession for this year. for 2023. And not only did that not happen, that includes Fed forecasters and really essentially all forecasters, a very high proportion of forecasters were expecting very weak growth or a recession. Not only did that not happen, we actually had a very strong year. And that was a combination of strong demand, but also real gains on the supply side. So this was the
economy
year
is different
when labor
than
force
the markets.
participation
Recession
picked
means
up,
the
where
bottom of
immigration
the
picked
market.
up, where the distortions to supply and demand from the pandemic, the shortages and the bottlenecks really began to unwind. So we had significant supply side gains with strong demand, and we got what looks like a 2.5% plus or a little more than that growth year at a time when potential growth this year might even have been higher than that just because of the healing on the supply side. So that was a surprise to just about everybody. I think the inflation forecast is roughly what people wrote down a year ago, but
Look
in a
how
very different
relaxed he
setting.
is. Look at his
And I would say
body
the labor
language.
market, because of the stronger growth, has also been significantly better. If you look back at the S&P from a year ago, there was a significant increase in unemployment. That didn't really happen. We're still at 3.7%. So we've seen strong growth, still a tight labor market, but one
more
that's coming
cents to
back
go
into balance with
to break
with
3 month
support from the
cycle.
supply side, a greater supply of labor. It's that's what we see, and that I think that combination was not anticipated broadly.
Howard.
There was a significant increase in unemployment.
Thanks,
It
Howard.
didn't
Schneider
really
with,
happen. We're still at
Reuters, and
3.7%.
Thanks for taking the questions. I wonder if you could give a little more color or detail on what motivates the lower rates next year, whether it's a coincidence, for example, that the spread between PCE inflation, core inflation, and the federal funds rate stays constant over the year. Are you simply calibrating against the fall in prices, in the price level that you're expecting, in the rate
Recession
of inflation
does
that you're
not mean
expecting,
the market's
as
down
opposed
3
to
months in a
supporting the
row.
economy?
It means the economy is
Nothing
down.
quite that
Spending
mechanical
is down.
happening. The
not
S&P
the
really
market.
is a bottoms up, built from the bottom up, right? So I think people are looking at what's happening in the economy, and I think if you look at the big difference from September in the S&P, the expectations for inflation this year, both headline and core, have come down, really significantly in 3 months. That's a big piece of this. At the same time, growth is turned out to be very strong in the third quarter, is slowing, we believe, as appropriate. And we've had several labor market reports which suggest, again, significant progress toward greater balance across a broad range of indicators. You're seeing so many of the indicators coming back to normal, not all of them. But so I think that people look at that and they write down they basically each individual writes down a forecast and a
I
rate
started with
forecast that goes with that forecast. We
$5,000
tabulate
live on
them
the
and
show
publish it.
2.5 years
so
ago.
It's not, it isn't. You ask about
Now look.
Real rates. I take it. That is something that we're very conscious of and aware of and monitor, and it's certainly a big part of. It's a part of how we think about things, but really it's broader financial conditions that matter. And as you well know, it's so hard to know exactly what the real rate is or exactly how tight policy is at any given time. So
I said 67 today.
You couldn't follow that like it was a rule.
$5,000 2.5 years ago.
All the time, but it's certainly something that we're focused on. And indeed, if you look at the projections, I think the expectation would be that the real rate is declining as we move forward.
There it is.
It sounds like the discussion over that
We
I could
predicted
follow up has already kind of
67,000,
begun.
now to 70.
I'm
It's
wondering,
easy doable.
just related to Steve's question, how the tactics of this play out, given the slowing of inflation and the fact that the deeper you get into 2024, the closer you get to a
236.
presidential election.
It's
Do you want to
breaking.
front load this, in other words?
Yeah, no, we don't think about political events. We don't think about politics. We think about what's the right thing to do for the economy. The minute we start thinking about those things, we just can't do that. We have to think, what's the right thing? We'll do the things that we think are right for the economy at the time when we think is the right time. That's what we'll always do. So I mentioned we're moving carefully. One of the things we're moving carefully about is that decision over that assessment, really, over whether we've done enough, really. And you see that people are not writing down rate hikes. That's us thinking that we have done enough, but not feeling that really strongly, confidently, and not wanting to take the possibility of a rate hike off the table. Nonetheless, it's not the base case anymore, obviously, as it was 60, 90 days ago. So that's how we're approaching things. And as I mentioned, we wrote down this SEP, and it talks about people have individual assessments of when it will be appropriate to start to dial back on the tight policy we have in place. And that's a discussion we'll be having going forward. But that's another assessment that we're going to make very carefully. So as time goes forward.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've argued over the last year that policy tightening started before you actually lifted off because the market anticipated your moves and tightened on your behalf. The market is now easing policy on your behalf by anticipating a funds rate by next September that's a full point below the current level with cuts beginning around March. Is this something that you are broadly comfortable with?
Thank you, Stephen.
So this last year
2.5
has been
years of
remarkable
work
for the
finally paying off.
sort of seesaw thing back and forth we've had over the course of the year of markets moving away and moving back and that kind of thing. So, and what I would just say is that we focus on what we have to do and how we need to use our tools to achieve our goals, and that's what we really focus on. And people are going to have different forecasts about the economy. And those are going to show up in market conditions, or they won't. But in any case, we have to do what we think is right. And in the long run, it's important that financial conditions become aligned or are aligned with what we're trying to accomplish. And in the long run, they will be, of course, because we will do what it takes to get to our goals. And ultimately, that will mean that financial conditions will come along. But in the meantime, there can be back and forth, and I'm just focused on what's the right thing for us to do, and my colleagues are focused on that too.
The markets seem to think inflation is coming down credibly. Do you believe we're at the point where inflation is coming down credibly?
Listen, I welcome the progress. I think it's really good to see the progress that we're making. I think if you look at the 12-month measure, look at the 6-month measures, you see very low numbers. If you look at 12 months measures, you're still well above 2%. You're actually above 3% on core through November at PCE. That isn't to say I'm not calling into question the progress. It's great. We just need to see more. We need to see continued further progress toward getting back to 2%.
Virgin Galactic
that's what we need to see.
236.
So, it's our job to restore
We've just
price
broken
stability.
another all-time
And
high.
it's one of our two jobs, along with
67,000.
maximum employment and people.
126.
So we're very focused on doing that. As I mentioned, we're moving carefully at this point. We're pleased with the progress, but we see the need for further progress. And I think it's fair to say there is a lot of uncertainty about going forward. We've seen the economy move in surprising directions, so we're just going to need to see more further progress.
Gina.
Gina Smilik, New York Times. Thanks for taking our questions. In the SEP from today, growth is notably below potential in 2024. If growth were to surprise us again in the way that it has for years now by being stronger than expected next year, would it still be possible to cut rates? Or put another way, is below trend growth necessary to cut rates, or would continued progress on inflation alone be sufficient?
So we'll look at the totality of the data. Growth is one thing. So is inflation, so is labor market data. So we look at the total as we make decisions about policy changes going forward.
There it goes.
All those things, and particularly
You'll never see it at 150 again. We bought the bottom.
The outlook.
I'm holding it to $100.
So that's what we'd be looking for.
There it goes.
If we have stronger growth, that'll be good for people. That'll be good for the labor market. It might actually mean that it takes a little longer to get inflation down to 2%. We will get it down to 2%, but. If we see stronger growth, we will set policy according to what we actually see, and so that's how I would answer.
I guess the question I'm asking, if you don't mind a quick follow-up, I guess the question I'm asking is above trend growth itself a problem?
It's only a problem it's not itself a problem. It's only a problem insofar as it makes it more difficult for us to achieve our goals. And if you have growth that's robust, What that will mean is probably will keep the labor market very strong. It probably will place some upward pressure on inflation. That could mean that it takes longer to get to 2% inflation. That could mean we need to keep rates higher for longer. It could even mean ultimately that we would need to hike again. It just is. It's the way our policy works.
We know it's not happening, and so do you.
Hi, Chair Powell. Neil Irwin with Axios. How do you interpret the state of the labor market right now? And in particular, you've referred even today to evidence that it's coming into better balance. What would you need to see to conclude that it has reached that balance?
So on the better balance side, there's just a lot of things. It's you see job growth still strong, but moving back down to more sustainable levels given population growth and labor force participation. The things that are not quite, but let me go on with that list. Claims are low. If you look at surveys of businesses, they're sort of the era of this frantic labor shortage are behind us, and they're seeing a shortage of labor as being significantly alleviated. If you look at shortages of workers, whereas they thought job availability was the highest it had ever been or close to it, that's now down to more normal levels by so many measures: participation, unemployment, so many measures, the unemployment, job openings, quits, all of those things. So wages are still running a bit above what would be consistent with 2% inflation over a long period of time. They've been gradually cooling off, but if wages are running around 4%, that's still a bit above, I would say. And I guess there are just a couple of other, the unemployment rate is very, very low. And these are, but I would just say overall, the development of the labor market has been very positive. It's been a good time for workers to find jobs and get solid wage increases.
Claire?
Claire Jones, Financial Times. I'd say the mood among economists at the moment seems to be one of cautious optimism, which is somewhat corroborated by your forecast, by this sense that we are going to have a soft landing. Yeah, when we hear from the general public, there's a lot of discord about economic conditions. What do you think explains this disconnect, and does it matter for
the economy is not the market.
It may
Rich
be.
get richer,
A common
poor get
theme
poorer.
is
Always.
that, while inflation is
just the
coming
way it
down,
is.
that's very good news. The price level is not coming down. Prices of some goods and services are coming down, but overall, in the aggregate, the price level is not good. So people are still living with high prices.
They are,
and that is something that people don't like. And what will happen with that is wages are now, real wages are now positive. So that wages are now moving up more than inflation as inflation comes down. And so that might help improve the mood of people. But we see those public opinion surveys. The thing that we can do is to do our jobs, which is to use our tools to foster price stability, which has such great benefits over such long periods of time, and which is the thing that really enables us to work for and achieve an extended period of high employment, which is so beneficial for families and companies around the country.
Victoria?
Hi, Victoria Guido with Politico. I wanted to ask, on the flip side of if things start to deteriorate rapidly, if we do fall into a recession, if we do start to see unemployment rise at sort of the levels of inflation that we're seeing now, how would you all think about that in terms of rate cuts? Would that be a sign that you've done your job?
Stick till the end, and I'll welcome you in properly.
If the economy looks like it's starting to fall into recession, if the jobless rate starts to rise.
That's not something we're hoping to see. Obviously, we're hoping to see something very different, which is continuation of what we have seen, which is the labor market coming into better balance without a significant increase in unemployment, inflation coming down without a significant increase in unemployment, and growth moderating without a significant increase in unemployment. That's what we're trying very much to achieve. And not something we're looking to see.
But would you take that as a signal that you should cut rates?
I Obviously,
He's
we'll
not going to
look
say.
at the totality of the data, as I've mentioned a couple of times, and certainly
got no
the labor
chance.
data would be important in that. And
Be happy with the rise we got. It's steady
you can
and it's
describe
sound.
a situation like that where if there were the beginning of a recession or something like that, then yes, that would certainly weigh heavily in that decision.
Thank you, Whit. GM.
Michael McKee from Bloomberg Television and Radio. Mr. Chairman, you were, by your own admission, behind the curve in starting to raise rates to fight inflation. And you said earlier, again, the full effects of our tightening cycle have not yet been felt. How will you decide when to cut rates, and how will you ensure you're not behind the curve there?
So we're aware of the risk that we would hang on too long. We know that that's a risk, and we're
2:38.
very focused on not making that mistake.
Now it's
And,
showtime.
we do regard the two, we've come back into a better balance between the risk of overdoing it and the risk of underdoing it. Not only that, we were able to focus hard on the price stability mandate, and we're getting back to the point which is what you do when you're very far from one of the two mandates. You're getting now back to the point where both mandates are important, and they're more in balance too. So I think we'll be very much keeping that in mind as we make policy going
67
forward.
in 2.5
And the things
years.
we'll be looking at, I've
No
already
shorts,
described. We're
no
obviously
options.
looking hard at what's happening with demand. And what we see the
Just
same thing
sound
other people see, which
value
is a strong
investment.
economy, which really put up quite a performance in 2023. We see good evidence and good reason to believe
Virgin's
that
going.
growth will come in lower
The squeeze
next year.
will come soon.
And you see what the forecasts are. I think the median growth, median participant
$4
wrote
easy.
down 1.4% growth, but we'll have to see. It's very hard to predict. We'll also be looking to see progress on inflation and the labor market remaining strong, but ideally without seeing the kind of large increase in unemployment that happens sometimes.
When you begin the cutting cycle, will it be essentially run the same way you do it now with raising rates, where you basically do trial and error, cut and see what happens, or will you tie it to some particular measure of progress?
We haven't typically tried to articulate, with one exception, really specific target levels, which was, some of you will remember the thresholds that we used in, 2013. The answer is, these are things that we haven't, really worked out yet. We're sort of just at the beginning of that discussion.
Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. So if the Fed cuts rates, as the dot plot is showing, about 75 basis points, does that signal or that there's a belief of weakness next year in the economy?
It wouldn't, if that were, first of all, let me just say, that isn't a plan. That's just accumulating what people wrote down. So that's not something, this, but allow me to say it again. We don't debate or discuss what the right, whose SEP is right. We just say what they are and we tabulate them and publish them. So it's important for people to know that, but it wouldn't need to be a sign of, it could just be a sign that the economy is normalizing and doesn't need the tight policy. It depends on, the economy can evolve in many different ways, right? So, but it could be more what I just described.
And you focused on core inflation. We've heard from in other meetings. How sticky is core inflation right now?
Well, that's what we're finding out. And we've seen real progress in core inflation. It has been sticky, and famously the service sector is thought to be stickier, but we've actually seen reasonable progress in non-housing services, which was the area where you would expect to see less progress. We are seeing some progress there, though. In fact, all three of the categories of core are now contributing. Goods, housing services, non-housing services, they're all contributing.
I said $67,000 would be an easy win.
Report by report.
More than likely, $70,000 today.
Okay, let's go to Katerina.
From $5,000. Look.
Katerina Saraiva, Bloomberg News. Thanks for taking our questions. I just wanted to ask a little bit about, we had some pretty positive data this morning and yesterday. I'm assuming those were not incorporated into the forecasts we see today. But I just wanted to ask, how that kind of adds to your thinking, on the inflation outlook.
Right. So we got CPI the morning of the first day, and we got PPI the next day, which informs the translation into PCE. So it's very, very late in the game, but nonetheless, participants are encouraged to update their SEP forecasts until probably mid-morning today. After that, so staff has to accumulate all of that and create the documents that you see. So until about mid-morning, maybe late morning, it's okay to update. And I believe some people did update their forecasts based on what we saw today.
Okay, and you see, how are you, when you think about, starting to think about the rate cuts next year or whenever they come, how do you think about the economy we're in now, kind of post-pandemic? Do you think that there's been significant structural shifts, and is that going to change how you look at a rate cut path?
The question of whether there have been fundamental structural shifts is a really hard to know the answer, and a very interesting one right now. The one that would affect, one that comes to mind, though, is just the question of where the neutral rate of interest is. And so, for example, if it's risen, and I'm not saying that it has, but if it were to have risen,
I will
that
answer
would
that
mean that
at the end of this
interest rates would
presentation.
need to be a little bit higher to convey the same level of restriction. The thing is, we're not really going to know that. People will be writing papers about that 10 years from now and still fighting about it. So it's just that it's going to be uncertain. So we're going to be making policy in this difficult, uncertain, really unprecedented environment. Someone once said that the natural rate of interest by its works, and that's really right. But that's very difficult because policy operates with a lag. So it's one of the reasons why we slowed down this year. We started slowing down at this meeting last year, reducing the pace at which we were adding restriction. And over the course of this year, we really slowed down a lot to give those lags time to work. In terms of demand, has demand shifted more away from services into goods? You can make a case for that the shift back into services has not been complete, and it doesn't look like it's ongoing, but I don't know if that's right. Maybe people just bought so much stuff that they temporarily don't want any more stuff. They haven't got any place to put it.
They bought so much stuff.
Go to Jennifer.
That's funny. I'll give him that.
Thank
I
you, Chair
bought loads
Powell.
of
Jennifer
stuff.
Schonberger with Yahoo Finance. You said back in July that you needed to start cutting rates before getting to 2% inflation. As you mentioned,
It's Amy Winehouse.
inflation is now running at 3.5% on core. On a 6-month annual basis, core PCE is running at 2.5%. Though when you look at super core and shelter, they are, of course, stickier. So when looking at the different components of the data, how much closer do you have to get to 2% before you consider cutting rates?
I mean, the reason you wouldn't wait to get to 2% to cut rates is that policy would be too late. I mean, you'd want to be reducing restriction on the economy well before 2%, because before you get to 2%, so you don't overshoot. If we think of restrictive policy as weighing on economic activity, it takes a while for policy to get into the economy, affect economic activity, and affect inflation. So I can't give you a precise answer, but if you look at what's in the SEP, and I think you'll see a reasonable estimate of the time lags and things like that it would take.
Do you think below 3% would be reasonable?
I wouldn't want to identify one precise point, because I would be able to look back then and probably find out that it turned out not to be right. But we'll be looking at it and looking at the broad collection of factors.
Hi, Chair Powell, Jean Young with Market News. Wanted to go back to the stickiness of inflation question. Over the past couple of years, a lot of central bankers have talked about the more difficult last mile of getting inflation back down to 2%. Yet it's also been surprising how fast inflation has come down this year. I'm curious, do you think something has changed in our understanding of inflation? Or do you subscribe to this notion still, or is it something different about the U.S. economy? Thank you.
I think I think this. We felt since the beginning that it would be a combination of two factors. The first factor is just the unwinding of what happened in the pandemic, the distortions of supply and demand. And the second thing would be our policy, which was weighing on aggregate demand and actually making it easier for the supply side to recover because of lower demand. We thought those two things were going to be necessary. Sorry, say the last part of your question again.
I'll answer that question at the end.
If there's something different about the U.S. economy.
Yeah, so it's not that it may or may not be about the U.S. economy being different. I think that this inflation was not the classic demand overload, pot boiling over kind of inflation that we think about. It was a combination of very strong demand, without question, and unusual supply side restrictions, both on the goods side but also on the labor side, because we had a participation shock. So this is just very unusual. And, we had the view, my colleagues and I broadly had the view that we could get a lot of, you had essentially a vertical supply curve, because you ran into the limits of capacity at very low levels because there weren't workers and because people couldn't, the supply chains were all broken. So we had the view that you could come straight down that vertical supply curve to the extent demand reduced. And, something like that has happened. It happened so far. The question is, once that part of it runs out, and we think it has a ways to run. We definitely think that the sort of supply chain and shortages side has some ways to run. Does labor force participation have much more to run? It might. Immigration could help, but it may be that at some point you will run out of supply side help, and then it goes down to demand, and it gets harder. That's very possible. But to say with certainty that the last mile is going to be different, I'd be reluctant to suggest that we have any certainty around that. We just don't know. I mean, inflation keeps coming down. The labor market keeps getting back into balance. And, it's so far so good, although we kind of assume that it will get harder from here, but so far it hasn't.
Okay, we'll go to Megan for the last question.
Hi, Chair Powell. Thanks for taking our questions. Megan Casella with Barron's. I want to ask about the balance sheet, given the Fed's focus now on proceeding carefully and considering rate cuts. And can you talk us through what the latest thinking is, and has there been any consideration of altering the pace of quantitative tightening at all?
We're not talking about altering the pace of QT right now, just to get that out of the way. So balance sheet seems to be working pretty much as expected. What we've been seeing is, that we're allowing runoff each month. That's adding up. I think we're close to 1.2 trillion now. That's showing up. The reverse repo facility has been coming down quickly, and reserves have been either moving up or as a result or holding steady. At a certain point, there won't be any more to come out of, or there'll be a level where the reverse repo facility levels out, and at that point, reserves will start to come down. We still have, that we intend to reduce our securities holders until we judge that the quantity of reserve balances has reached a level somewhat above that consistent with ample reserves. And we also intend to slow and then stop the decline in size of the balance sheet when reserve balances are somewhat above the level judged to be consistent with ample reserves. We're not at those levels. With reserves close to $3.5 trillion. We don't think we're at those reserves. There isn't a lot of evidence of that. We're watching it carefully, and so far it's working pretty much as expected, we think.
Adjusting that thinking at all by the time you're considering or moving forward with rate cuts? Is that time to rethink, or are you still going to follow that thinking?
So I think they're on independent tracks. So you're asking, though, the question, I guess you're implying the question of can you continue with QT at such time, QT, which is a tightening action, at such time as policy is still tight. And the answer is it depends on the reason. If you're cutting rates because you're going back to normal, that's one thing. If you're cutting them because the economy is really weak, so you can imagine you have to know what the reason is to know whether it would be appropriate to do those two things at the same time. Thanks very much.
Chairman Powell wrapping up 2023
there
and
we go.
A monster rally from New York City this afternoon. Good afternoon. Good afternoon. Alongside Tom Keene and
smiling.
Lisa Browitz, I'm Jonathan Ferro.
Now it gets interesting. So let me answer all the questions. Let's see exactly where we are. This is absolutely phenomenal. Let's talk about it now. Let's break it all down. And let's talk about what we've done here the last couple of years. Let's take a moment to really, enjoy the 2.5 year journey. So we've got lots of questions to answer, and let's break it all down. We've got lots of people watching on 20 different platforms this afternoon. It's quite insane. First of all, we've got a really big audience over on TikTok. Thank you to all of you if you're watching me on TikTok. Links are below on my website if you want to follow me on TikTok. Here is the link. I want to thank all of you for your 2.5 year journey. We got 38,000 followers on TikTok now. Thank you to all of you. There's my links page if you want all of my links to all of the services where we're live. So thanks to all of the 38,000 of you following me over there. I want to thank our Kick audience. Thank you very much indeed. Our Rumble audience, thank you. Our Facebook audience, thank you. Our Stock Quit audience, our X account audience, if you're not yet seeing all my trades before I make them, let me give everybody the link there to my X account. I post my trades before I make them. I want to thank everybody who's watching me, all my CEOs. We're doing Meet the CEO now from the New York Stock Exchange. Thanks to all of you who follow me on LinkedIn. So I just want to thank everybody who's tuned in today, number one. And we've got a lot of new guests here today. Let me just talk to the guests, tell them exactly what this channel is about, what we've done, but more importantly, where we're going. So I started 2.5 years ago with $5,000. The greatest investment I made was myself. I worked on YouTube for 1.5 years for free, earned no money. I am not a YouTuber. I am the world piano man as voted by Elton John. Here is my music channel. I've toured 195 countries of the world. This is me singing as the Phantom of the Opera with my Vegas showgirls. There's Elton John's jacket when I did Lion King. This is me. I'm not a YouTuber. I'm not here to sell videos. I'm not here to sell rah-rah noise content. I built the channel to be a TV station, the best live TV channel in the world that's open and honest. This is my TV channel I built. And I wanted it to be the most honest, real YouTube TV channel in the world, even though we're on every other platform at the same time. A couple of days ago, a few months ago, I said to you we would start meeting the CEO soon. I would invite Sir Richard Branson, Elon Musk on the show. The troll said, "You'll never do it. It won't be possible." Well, you saw me a few days later, live on Facebook, singing the royalty of Texas is Homes. I've done Mark Cuban, Jerry Jones, and I did Doug the other night, and I'm meeting the CEOs. We met our first CEO live on the show from the New York Stock Exchange just 2 days ago. After that meeting, the manager of the floor on the New York Stock Exchange prefers my interviews over Bloomberg, over Yahoo, over Mad Money. Why? Because it's real. We reach the world. We have members now in 46 countries. We go out in 14 different languages, and the other mediums are there to sell videos. They are for the elite, and they don't speak to anyone. What we do is we speak to the world. We're going to be at 10 million subscribers. 98% of our live viewers are members, and we're here to help people. That's what we do. And 2.5 years ago, I started to invest. I went through hell, kept going down, learning every day, not selling videos, but going live up to 10 hours a day, every single day, talking to the biggest investors in the world, learning. But I learn everything from you. I've studied human sentiment as an entertainer. I read the audience. I answer every single question personally. I reply to every question. All the trolls that try to bring you down, tell you can't do anything. We have done and achieved every goal we set out to achieve and some 10 times over. I bought Virgin Galactic at $35, went all the way down, wrote the Virgin Galactic song, changed policy. We now represent 95% of the world's investors, of retail investors on Virgin Galactic. We're now meeting all of the CEOs direct from the New York Stock Exchange. This is the most honest, real YouTube channel in the world. At the end of the day, I go home and I want someone, my wife, to tell me I did a good job. That's it. Nothing else, not whether I sold videos, not whether I got more subscribers. Did I do a good job? Did I help people today? Was everything truthful? Was it real? And if you invest, the very meaning of the word invest means dig the ditches. When it's down, when it's hard, you research, you learn, you never give up, you find value. We then teamed up with the best algorithmic software in the world, which is completely unbiased. That is, of course, Alpha Spread, what I use here. And they have partnered with me. It's better than Bloomberg reviews. It's better than Yahoo. They're all influenced. It's better than all the Wall Street analysts. We do reviews. Every single one of my reviews makes it on the homepage. If I show you Virgin Galactic and we scroll down, we got the numbers, the balance sheet, the profitability, the solvency scores, and there are all my reviews above Yahoo, above Bloomberg, because they're real. They're based on real numbers. The point I'm making is, if you buy value, if you look for the undervalued stock that is undervalued, oversold, you can't help but make money. So over the last month, I mean, we'll just take the last month or whatever, I am up on my portfolio, as you can see, 31%. I don't know, 100%. 200, 300, 400%, the S&P. Warren Buffett, I think Berkshire Hathaway's up like 2% over that period. I'm up 31% with no options trading, no shorting of stock, just buying companies, not buying share prices, buying companies. And everything I have done because of you, not because of me. You have taught me with your sentiment. I have learned from the trolls. I have learned from those that was saying you're doing it all wrong. Lucid is a great stock when it's rubbish. When Tilray is a great stock, it's rubbish. When Mullen is a great stock, it's rubbish. I studied it. I found out Dave Mitchery has done it 6 times before. Scam companies. We've got Peter Rawlinson from Lucid taking all the money out to pay himself. Rubbish. Going bankrupt. Erwin Simon from Tilray. Misdirection of the company. Suddenly we're all over the place. Rubbish. Telling everybody we're now buying great breweries when we're buying bankrupt breweries. SoFi, the CEO, talking rubbish. We're going to get rate cuts for the whole of last year. He's a money business. It's to do with money, SoFi, so it's a fintech. Talks rubbish. Analysts making up stories, talking nonsense. And what's his name? Mad Money, flipping Jim Cramer, telling everyone that J&J, get out of it. It's tied up in litigation. Rubbish. All it's about is getting people to watch his silly little program with his boya and his silly sound effects. The only person making money is the TV channel and Jim Cramer. You're getting the wrong information. Rubbish. Working Lunch told me a year ago to buy oil. Rubbish. It was wrong. I started doing it. I listened to it. Then I started understanding, learning the rules. I read the balance sheet. I found out that was rubbish information. I waited. I bought the bottom, kept buying the bottom, and now it's going up, and it has been over the last few weeks. Coca-Cola. How many people told me Coca-Cola was overvalued? I waited, and I bought the bottom only a month ago, and now I'm 8.73% up. That's before today. Today it's only 0.9%. The dividends and so on and so forth. I could go on and on and on. This channel, and I'm doing this for those that are new today, the rest of you know this, 98% of our live viewers are members. We're going to be 10 million subscribers. We're going to interview every single CEO on the New York Stock Exchange. We've just started doing it. I'm going to fly on Virgin Galactic. I've got the Virgin Galactic song. I'm holding Virgin Galactic to $100. And I want to thank you. It's been a hell of a journey. From $5,000 with no income for a year and a half. I used to earn 20 grand a night doing sellout theatres. I stopped doing all of that, not out of choice, out of COVID. Built the studio, spent all my savings to build this studio to make it the best studio in the world for on YouTube. You know, over the top on everything. Light, smoke, fireworks, you know what's in here. You see my concerts on a Friday night. And I started learning and investing, and here we are. And I feel really, really good today because finally, it's come good today as a surprise. It's not a surprise. A year ago, nearly a year to the day actually, I said we were in a bull market, and the banks 6 months later agreed we're in a bull market. And they named the date, we went bullish, but it took them 6 months to say it. They knew, they just can't say it, or they don't know. All right, that's the first thing. Then I knew about the rates, not because I'm clever, because I'm not. You're the clever ones. I learned from you. I listened to all of those. Do you remember we had Market Profit would always come in and try to manipulate the market. We had Peru come in, an agency, hiring people to go around getting YouTubers because he thought I was a YouTuber, right? Well, I'm not. I'm an entertainer helping people. You got that wrong. I don't need this. I could go back doing theatre shows. I do this because I love to help people. And it worked. They influenced me. They promised me stuff. They sent me the money for my screen. This screen here. He bought this screen, do you remember? This TV screen here, which is what's being seen on TikTok right now. He sent me money to buy that. They were putting adverts on my channel, getting me to say stuff to promote certain rubbish stocks like Tilray, like SoFi, like IonQ, which was good, by the way, but it was just overbought, and other things like Lucid, for example. And they tried to manipulate me, but they couldn't. They did it first, and I learned, and I learned, and I learned. And I said then that the portfolio, I said we'd do Meet the CEO. I said where Virgin Galactic was going, not because I'm clever or I have a crystal ball, because you learn from the trolls. You learn from the liars, the manipulators, because they tell you everything. Because I answer every question, and I know the sentiment of what's going on and what people are trying to say and what they are saying to me. And we got those people that tried to manipulate SHOT. Remember that? Safety Shot. What a load of rubbish. We researched it. We found out the whole thing is a load of nonsense. What about Nikola? Ridiculous, rubbish. We exposed it all. And it's very, very easy to make money on the stock market. Now it's going to get even easier. But the hard part is to keep it. And those that make up stories and short the stock and manipulate it all will always, long term, will always lose their money. They win the battles, but they always lose the wars. Anyway, that's what this channel is all about. If that's for you, join us. We're here 10 hours a day. I'm not going anywhere. And the other thing they told me, all the big YouTubers who just want to sell videos, oh, you won't last in the in the bear market. I say it's not a bear market. Well, it is. No, it's not. It's going down. You won't last, you'll lose all your money, you'll give up. I said, I won't give up. Oh yeah, all YouTubers give up. I'm not a bloody YouTuber. I know what it's like. I have toured the world for 38 bloody years. I've never cancelled a gig apart from one when I broke my arm. Never missed a gig. Did two shows a day of Phantom of the Opera. I know how to work hard and I'm not going anywhere. Oh, you'll give up. No, I won't. You'll give up because you're a bloody YouTuber. I am not. And here we are. I feel very, very happy that we've raised a lot of money for charity. We've built a family. We've achieved what we wanted to achieve. And now we're moving on to be the best, most honest YouTube channel in the world. And we double our growth every month. We should hit 10 million in a few years' time, and our Meet the CEO series is going to explode. I just spoke yesterday to the manager on the floor at the New York Stock Exchange. Says, I'm lining you up with as many CEOs as you want. They want to come on your show. They like what you're doing, and they're going to come on my show. And I'm very, very excited to bring you that information live every day, so you can see the actual mind of the company, the CEOs, what they really mean, so you can make informed decisions and you can invest wisely, and you don't have to listen to the flipping rubbish that's being told to you by Bloomberg, CNBC, and all the rest of it. We cut through all the rubbish and bring you the facts. Anyway, thank you for allowing me to splur that all out, because it's been 2.5 years of dealing with rubbish as well as the love I get from this audience. Thank you for all your super chats, your memberships that have funded the show, made it possible. If it wasn't for that, I would have had no money to eat at all. But thanks to you and your generosity, and everyone's a member, I really sincerely want to thank you. And Bill, I want to thank Bill. Bill's on the channel. Bill has bought many people memberships over the last few weeks as a Santa Claus gift. He's a retired war veteran, and he's been buying people memberships and giving memberships away, paying for it out of his own hard-earned money. So, Bill, thank you very much for that. Right, let me read some of the questions. Let me have a look. Now, if you want to get, because they're limited now, if you want to get the Virgin Galactic mug to 100, here it is in the shop. I'll give you the shop. You can see it. Look, you've got the Virgin Galactic to $100. You can for Christmas. If you order this week, you'll receive it before Christmas. But by the end of the week, that is. The Virgin Galactic mug, I'm loving it. The mugs and glasses are signed. Look, can you see my signatures on it? You got the fleeces, the hats. They're all made in your country, wherever you come from. They're made in your country. We've got the crystal ball. Remember, I always made fun. I've got my own crystal ball. There's loads of things here that you can get. The on-tour stuff, when we go and do the meet and greet, when we all get together. All of it. If you want to get any of that stuff, it's there. All right. If you want my newsletter, my Christmas cards, this is my website, martynlucas.com. You can get the free newsletter. There you go. Let me share that with you. Virgin Galactic now 242. We're celebrating. We don't. I've got some questions to answer. I'll do that in a second. You ain't getting a super chat off me today with that profit. Ha ha! Massive congrats and an even bigger thank you, mine. He says, I get super chats when I lose money. How come? You've all made money. Why are you not celebrating? Why do I only get super chats when I lose money? I mean, what's all that about? What do you buy tomorrow? Any ideas? Right, let's calm it down now and let's discuss the strategy, what we do now. I'm loving it. Nothing, Chris. McDonald's coin went from 1 to 20 today. Nobody listened. Nobody listened. Falafel. Exactly. Thank you, Martyn, for all you do. John Granfors, you're welcome. Best honest YouTube channel in the world from Mike. Thank you. We are real investors here. Eduardo, thank you. I got on Virgin Money the other day. Had to break, but space is touching 240. It's 242 now. Martyn, what's your profit on Virgin Galactic? I'm up 49%. I am up 54.49. I bought at the bottom. I declared it was the bottom. I said ahead of time what the bottom was. I must have made 50 videos telling you 150 is the bottom. Not because I was guessing, not because I was listening to some clown on YouTube, because I was speaking to the people at Virgin Galactic. I have worked for Sir Richard Branson. I was sharing you with the information day in, day out. That's why I said 150, and I was within 7 cents of it. And at 157, I went all in, turned on margin, bought as much as I could. As if you were here, you will remember all of that. What a speech. Martyn for president. Raman. Wow. I am up 23.9%, says Queen. I am the oily guy. There he is. What now? I want to be absolutely clear. If I'd listened to Stephen Lewandowski, a member of the family, see, at the time, I wasn't doing that. I was listening to CNBC, Jim Cramer, Bloomberg. I don't do that anymore. I should have listened to Stephen, who's a family member, a friend who cares about what I'm doing, who cares about the information he shares with the family. If I listened to Stephen, I wouldn't have bought Chevron when I bought it. I listened to some flipping liar on working lunch, who's an all-out liar. But there you go. I didn't. So what I had to do was trade out of the stock, and I kept buying it, waiting for the bottom, listening to Stephen, learning more and more and more, and then I bought more and more. So, I'm going to get out of it. I'm going to make money, but that's not the point. Martyn, you're the most entertaining investor on YouTube. Thank you, Bill. Hiya, Bill. Shot is up like 170% since your video. I don't care if it's up 170%. It has no value. The product has no verification if it actually works. The Luke Bryant event, there's no evidence of it even happening. There are some photographs, but there's no information on their website or their social media or any of their official information. We've called them. We've tried to test the product. They never reply to messages, answers, phone calls, nothing. The emails don't even work. You can't invest in that. Just because it's up, Ed, that is gambling. I will not buy a stock that I cannot speak to people at the company or I cannot verify the facts. It's all out manipulation. Flipping heck, you've got Binky Bonk, you got flipping Pepe coin with no value whatsoever, going up millions of %. Does that mean it's a good investment? No, it can go back down again. I'm not a gambler, I'm an investor. So I don't care that shot is up. And I don't care if those clowns try to come on my show and telling me, you should have bought shot. Not a bloody chance. I bought with my money, my hard-earned money, Johnson & Johnson, an actual profitable company. I bought Coca-Cola with my money. In fact, I spent $25,000 and bought J&J on margin at 8%. I ain't buying your bloody made-up nonsense on margin. Not a chance in hell. But we've made 170%. Good luck to you, mate. Good luck to you. Now sell it, and if you can't sell it, remember it could drop very quickly. You're going to pay 20% on tax. If you hold it, it won't be around tomorrow. I don't care what they've done. I don't care. Not interested in gambling. Every single person learns from your journey and get the entertainment in making us smile. Thank you, Bill. I'm not in it. You know that. Ed Spitzer, I know. I'm just reading out every comment, as I always do, for those that browse through the channel and miss things. It's very important that I read out every single comment. The good, the bad, and the ugly. Always face it all. Right. I said today we would hit 67,000. 100%. 100%, I said it. I said 100%, 67. I said more than likely we'll hit 70,000. We've got 20 minutes to go. Chances are we will hit 70,000, but we smashed 67. I was absolutely right. Not because I guessed, because I've bought undervalued stocks, which now everybody's FOMOing into, like Coca-Cola and J&J and Virgin Galactic. They're undervalued. How do we know they're undervalued? Because we study the balance sheet, and I show you all the reviews of all the stocks that I review and the Meet the CEO to go along with them now as well. I think MSK should have a thank you, as his super chats are massive. Yes, MSK. It's MSK here. I have thanked MSK hundreds of times, and I will continue to do so. MSK has given me the biggest super chats than anyone, world records. Where is my Mullen underwear and Robin Hood socks? Niels, I'm working on it. Robin Hood's a 4X. Let me just be clear. Those of you that told me Robinhood was rubbish and it was going down because you lost all your money on GameStop because you decided to follow Roaring Kitty, a person who didn't use his real name, unlike me, who shouldn't have been doing what he was doing as a licensed broker. He was breaking the law. You followed him. The only person that made any money was him and his mates. All of you watching him lost your money. A GameStop was a gamble. It was a manipulated lot of nonsense. And because you got froze out by Robinhood, when I'm glad you got frozen out by Robinhood, Robinhood did the right thing, as did every other broker. The difference is Robinhood had all those that don't understand investing on the platform. So they got the bad publicity for it. And you drove the stock down. You said it was rubbish. You shorted it. And I kept buying it on the way down. And now I'm up 37%. Now you're getting short squeezed and you're going to lose your money all over again. Here's my word of advice. Come out of Reddit. Come out of StockTwits. And learn and listen and read and study for yourself and find out the true value. Learn what a balance sheet is and learn what a good business is. A good business is not GameStop. It's Robinhood, for example. Okay? So stop hassling me with your nonsense, even though I do read every single one. Thank you for everything, Martyn, so far. The best comparing all bullshitters like the Wolf of Dubai, and all he is selling stupid information. Yeah, the Wolf of Dubai was basically buying Virgin Galactic when it kept going up, and all on the journey he blew up his YouTube channel because he's a YouTuber. I'm not a YouTuber. He told everybody how to get rich. I never tell anybody how to get rich. And all he did was make himself rich by selling you training programs. However, when the stock started going down, he stopped doing it. Well, I made more and more videos when it went down. I lost more and more money when it went down. I made friends with those at Virgin Galactic. I've worked for Richard Branson. I wrote the Virgin Galactic song. I ranked #1 in the world for Virgin Galactic and SBCE stock, and learned and lost a lot of money. Lost a heck of a lot of money, but I never gave up because I'm not here to sell videos. And yes, I wonder if anybody will watch him now. It's going up and now he'll tell you how to get rich again. I certainly hope not, but quite honestly, I don't care what he does. We all know he's just in it for himself. Hood uses Galileo, which is owned by SoFi. SoFi will be profitable this Q4. I think you need to re-look into them. Grippy, I would buy SoFi. The product is good. The CEO talks rubbish. If they get rid of the CEO that drives the ship and employ Vlad Tenev or somebody else, then I would. But there's many things I can buy. I don't need SoFi in my portfolio. And I won't buy a portfolio where the CEO talks nonsense. Buckaroony, Martyn Lucas Investor can thank bloody CGC for a lack of super chats. Martyn Lucas Investor can thank bloody CJC for a lack of super chats from MSK. I said CJC was rubbish. I told you it was rubbish. I did a review on it. The balance sheet was rubbish. The numbers were rubbish. The debt was rubbish. I told you not to be in CJC, Canopy Growth. I told you 100 million times. Same as Tilray. I don't care that Tilray's up today. It's lost direction. It's going up because Gamblers Anonymous are buying it again. Gamblers Anonymous are buying this today because everything's going up. So Tilray's going up. Excuse me, is this a casino or an investment market? It's going up because everybody's buying FOMO. So suddenly a company that's rubbish is going up. That doesn't mean the company is suddenly great. The company is exactly the same company as it was 5 minutes ago. It's still not going to sell medicinal cannabis in the US because it hasn't got a license to do it. And it probably won't get one for several years. And it's buying bankrupt breweries. So the fact of the matter is, look at the numbers, look at the balance sheet. It's going up because everybody wants to get rich. So they're buying penny stocks and thinking, I'm going to get rich. And if it goes up, I must be right. No, you're not. It's just a band of clowns buying the wrong thing. I am not buying Tilray brands. All right. I'm up 33% on Space. Now, Space is an investment. Why is Space an investment? Because at $1.57, where I bought it, I was buying the cash on the books alone. I wasn't buying the rockets. I wasn't buying the goodwill. I wasn't buying the business. I was paying for the cash on the books. And then somebody would say, but it's losing money and it's going to be bankrupt in 12 months. No, it's not. Not at all. It's got enough money for 2 years. Have you read the balance sheet? And I told people over and over again, right now you're buying it undervalued. That's when you buy it. No issue with debt. Now the debt's going away because interest rates are going to come down and Virgin Galactic are going to be successful. The people that are going to fly, including me, are going to go on the bloody thing. And it's just going to go up and up and up. So you're wrong. It will go to about $4 or $5 and then go sideways for about a year because Delta will take a while. But then ultimately, it can trade to 100, not because it's worth 100, because it will trade to 100. Richard Garcia, great channel. Thank you ever so much, Richard. Up 43% now on Hood. Congratulations. Robinhood is a Forex. Absolutely 100% is a $50 stock, which is nearly a 5x. No doubt, look at the cash, look at the balance sheet, look at the income, look at the revenue. And before you get confused when someone says to you, oh, but people are leaving Robinhood, the idiots are leaving Robinhood. Those that lost their money on GameStop have left Robinhood. Good luck, bugger off, don't come back. They've left, okay? You need to understand, Robinhood have added more higher wealth investors, real investors that are turning to Robinhood rather than Schwab, Ameritrade, and so on and so forth. And in the UK, everyone's jumping on it, okay? I know I've got the UK account already, as well as the US one. It's going to be very popular. They've spent the money to get it into Europe. Their capital expenditures are coming down. We've looked at the balance sheet and now profits are going to rocket. So we're glad that the gamblers of GameStop are out. They don't need to come back. We don't need that. We want real investors, and that's what we've got now. So that's why I know Robinhood's going to Forex. Is Kathy Wood on your CEO list? I have a manager on the floor of Wall Street who every time I review a stock, I am giving him the list of what I'm reviewing and he will invite and get the guests on my show. So yes, I plan on inviting all the way up to Elon Musk on my show. And as I do the reviews, more and more people will want to be on my show. And it's a discussion where we get to meet the CEO. Very, very real. Gordon Center, yes. Kathy Wood most certainly would be on my list. SPCE is spicy, said, I mean, I told you when it broke, what did I say? What did I say 100 times on every video for the last 6 months? When it breaks it would go up slowly. And as we hit the 3 months barrier, which was 236, it'll push through all the way to $4 very, very quickly. Well, it has. It went through 236. We're at 246 within 20 minutes? Here we go. Nothing to stop it. Now, we need to be clear. There will be profit taking. Some of you will take profits, and there's nothing wrong with that. But I will tell you now, 100%, I speak to 95% of the world's retail investors. They're not selling. And in fact, we spoke to Andy Shovel. Andy Shovel is one of the top investors, retail investors, and I think he's in at like $4. So there are many big investors who are in a lot higher than me. I got in at 157. There are many that are much higher. So they're not going anywhere for a long time. This will set a very good support all the way to around about $4. I think by the end of the year, we could be at $6. We'll then fall back to $5. I think they will exercise some dilution. They'd be crazy not to. They said they wouldn't, but I reckon they might, just because it adds extra piles of cash to the pile. So that's what I think anyway. Is SPC in the ARK ETF? No, I don't think so. Where would the meet and greet be in the UK? Last year it was in Cornwall. This year I was planning on doing it in Dallas. We still haven't done it. I don't know if we're going to do one now. It's been we've been putting it off. My Virgin Galactic is now 52%. Very, very nice indeed. Fair point about shot, Martin. That's my opinion. It's only my opinion, though. Anyway, Dallas says, Queen of Self-Braiding, why don't you create a fund we can invest in? You can. You can, Sea Lover. You can invest in this show. First of all, Sea Lover, you are a member of the channel. And let me just check, are you a member? Are you a member of my channel, Sea Lover? I think you are, aren't you? Yes. No, you're not. No, you're not. Okay. Well, the founder members are going to get some very special benefits in the future as we really take off. So the membership cost will never go up. It's only a couple of bucks a month for the bronze level. It will never go up. That's my promise to you. But the benefits will go up, and it's designed to make you money. It's not about making me rich at all. It's to help you, right? You know that. You know what I do. I'm not going to go into my perks and benefits now. You all know. You will get more out of it. 20 times back what you put in, and the price will never go up. And my original members, those that hold gold badges, we've got a few people here today. In fact, most of you are gold badges now, I think. Founder members, you're going to get a special perks in the future as we continue to grow. So that's the first thing. Secondly, my founder members and my members will be able to buy my crypto coin when I bring it out, and it'll be a very unique crypto coin. Unlike all the scammers who bring coins out, my coins will be a promise from me that I will never sell it. Number two, it'll be capped. There'll be a number, let's say it's 1 million, Martyn Lucas coins. There'll only be 1 million. I will never sell. That's it. So the price can only go up. It can't go down because I won't dump more. I won't sell them. I'll hold it, and I will give you my promise live on the show because I'm not trying to do it to make money. I don't care less. I want to see you all make money and you all enjoy owning and being part of the family. So that's another thing that you can do to invest, Sea Lover, through our show. What was Muttley? Was that Muttley? I don't know, probably. Surely short squeeze is imminent for Virgin Galactic. It's not enough volume yet, I'm afraid. Space is rocketing. Oh my God. Shalka Yelashez, how you doing? My 8,000 shares looking good, Martyn. Space, fantastic. I'm very, very pleased for you, Paul. Go Space. Oh, Buckaroony. Sorry, I read that wrong, and I appreciate that. Bless. I bought SGD, and it's up 30%. Good. Go, Paul. Robin Hood month. Robin Hood. What do you mean by that, David? Robin? Fireworks. You want the fireworks. Only get fireworks when we have super chats. If you want to do fireworks, we got to do a super chat for that, Stephen. You know that. My dad says, why buy Bitcoin? It has no value or meaning like stock that makes profits. What would you say to him to change his mind? James, he's right. He's right to some extent. I do believe, though, that Bitcoin or particularly Bitcoin is a digital gold. I prefer to own a mine. I'm going to buy a gold mine soon, as you know. Our CEO we interviewed the other day has just sold me some mine shares today before it pre-IPOs, and all of you can get in on that, by the way. If you want to, just message me, email or Discord. So I prefer real gold. I prefer the real gold mine, and I prefer businesses that make money. However, it's a bit of a lottery ticket. It does have some use case. We've learned that from Sensei. So it does belong as maybe 5% of your portfolio. That is my belief. So that's why I own some Bitcoin, yes. Go Space, as we said. Robinhood monthly metrics are released in 18 minutes. David Robin, it won't affect today. It'll be next month. Wow, XBI Biotech ETF is up over 4%. James, smart dad, don't change his mind. Martyn is a great speaker indeed. Adele Ant. Hey, how are you doing, Martyn? Great to see you. Lovely to see you here. I've got, it's the Christmas jumper. Told you. Hey, there's Rudolph. I've got a special prize as well, a gift for all my members as well. When I get to the bottom of the questions, if you had it on earlier, you would have made even more. If you'd had it on earlier, hey Alex, if Peloton goes down, please don't call me a clown. I will say how it is. Niels, hey Martin, all is okay. It's nice to see you, my friend. It's lovely to see you too. Martin Lucas Investor. Yes, admittedly, CGC is my gamble stock awaiting legalization. Yep. Exactly. You know why you bought it. You're a smart man. You know it's part of your lottery ticket. Just the same way as I have FFIE. That's my lottery ticket. I have no place buying it, but I certainly don't tell other people to buy it. It's my lottery ticket. I can afford to have it there. I can afford to lose $1,000. It's a lottery ticket. It's not an investment. It is a gamble. That's why it's just $1,000. I get more excited on space once we break over 3 and Newcastle winning 1-0. Great. I love it. Hillary Patty, long time no see. Hi, Martin. Hope you're now back in the green with Rocket Lab. 2004 is going to be awesome. Rocket Lab, Rocket Lab, Rocket Lab. Yes, I am. I'm in the green. I bought the bottom, 335, even though my average wasn't the bottom. I am very much in the green. And my Roth IRA, I've only got one share on my Roth IRA. What am I talking about? Anyway, yes, I'm up 3.42. So yes, I am in the green. Just wanted to say that I'm so glad I found this channel. Thank you, Martin, everyone, for all you do. Thank you for your support as memberships, as super chats. All of that is what's funded the show and everything. Martin Lucas, with CGC, I'm just gambling on gamblers, doing crazy legalization or scheduling news. I know what you're doing, mate. It's perfectly fine. What you think will happen when the market closes? There will be some profit taking, and we're going to go through the strategy in a moment when I get through all the questions. Martin Lucas, World Piano Man and World YouTube Man. Thank you, Bill. Not selling under until $100, Richard Garcia. I love it. Hopefully no dilution. You never want that on any stock. We will have some of that, Chris, but we can afford to. It's okay. Not a problem. I hope I only have 525. Got a scalp trade. Martin. A good laugh with a smile. Yesterday stated Virgin Galactic would reach 245 in one day and it now at 246. Do you believe the shorts are coming? 100%. 100%. There's nothing they can do to stop it. And how do I know it's 100%? How do I know it's 100%? Because I have a privileged position. All of you are looking at numbers, charts, if you are proper investors. However, you're not getting hundreds and hundreds of comments a day on Reddit, StockTwits, YouTube, Facebook, Instagram, LinkedIn, Twitter. I get on them all. And the majority of the comments are the trolls, the negative guys and ladies. And I can see what they're shorting. I understand their sentiment and I relay that to you. They think their negativity will get me out of the stock and scare me off. It does the very opposite. It does the very opposite because I know what they're trying to do. They're not investors. They don't have the knowledge. They just want to get rich quick without doing anything, talk nonsense, sit in dark rooms on Reddit, talk a load of flipping rubbish, join fan clubs and spread rubbish. The trouble is, I'm here now to debunk that information. So the more crap that you give to me, the more I tell people about it, the more I know what's going to short squeeze. You're telling me, and you're not smart enough to realize how daft you actually are. Because that's the very point. It's easy to beat those people. Easy. Rights will do well next year, says Chris Pickering. I sold everything because of the hype during Christmas. You sold everything during the hype. You mean what, last year or this year? Realty income. I think there's better opportunities, quite honestly, Chris. But I'll have a deep review of it if you want me to. We're coming up to the bell. I sold everything for hype and rebuy after Christmas. What do you think? I sold everything for the hype and rebuy after Christmas. We are going to get profit taking and we are going to get, what's the word I'm looking for? Tax harvesting, but I'm not selling anything. Absolutely not. Absolutely not selling anything. I'm not paying tax on these small profits. I'm going for 100% on all of my assets. I want them all to 1 to 2x. Here we go. Let's ring